Hello, traders. This is the weekend wrap. Let's go through all of the majors and a few of my favorites exotics and see what we have going for the new week. It was, I'm going to say, a pretty uneventful week to be honest. But we do have interesting setups heading into the new week, and we can get an idea of what we can pull out of the markets. It's time to make the pips. We're getting to the end of the month. Let's start out with the Euro USD. As we all see, the Euro USD, and you're going to see a reoccurring theme in my analysis here. And I'm going to go a few harmonic setups I will point out at the end once I finish going through these, because there is a nice harmonic setup in the Euro and the Swiss franc that does coincide with this resistance zone. And I'll let you know all these charts and so forth are on the block. The Euro USD, nice move higher. But still in this chop zone that we are all familiar about, between 134.75 and 137.40. And I mean, it took it, what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days to go from one side of the range to the other. And we're only talking about 200 pips here. So we have very small ranges, and but my inclination is that the pair is about to roll over, and we can see that the pair has hit resistance once again in this resistance zone between 138.30 and 137.40, where it has been hanging out all week. I mean, look at the range for the week. We have a low at 136.87, a high at 137.7. So I mean, basically the pair has been in less than 100 pip range for the last week. That is absolutely amazing. So we're having a knife fight right here, direction unknown. We can see that I would favor, this is my logic I'm going to deduce for you, that the pair has moved higher, and we have this trend line. If we go back, it's on a weekly chart, I think it goes all the way to 2008. You can see that the pair has been basically riding this trend line lower. And if we get back down on the one-day chart, you can see that the cross is very close to the top of that range again, which is hovering right around 139.15. We have this strong resistance zone that the pair has respected basically since last November. November, so any spike up to 139 would be a strong sell in my mind. But we've also had the confirmation once again of the taper in the United States. We've also had there's deflation threats in the Eurozone, and for some reason the Euro continues to go higher. It's beyond me. Only I think is diversification by the larger central banks such as China and so forth, just slowly but surely diversifying against dollars, and that makes the slow trend to the top side. But let's see, so what I'm looking for here is we need to get a little bit of market participation, and we can get a run back down to the bottom of the range and even further. But we need to see a break below. I'm looking for a break below about this 137 level. If we look on the 4-hour chart today, we had a nice 15-minute back trade that basically the pair pushed up to 137 and back. But if we look at this, that's not a very bearish candle. It's not a very bullish candle, it's a very bearish candle. So we're going to see close on this. If it wasn't Friday, if it closed down the 137 level, it could be a great opportunity to go short, but I'm not sure. I'm not going to jump into a trade late here on Friday afternoon. We look at the USD Swiss franc, we're going to say, hey, that looks like the same thing. Well, that's the inverse, right? So we can see here, same thing. It broke lower below this 89 level, hasn't found much resistance, but hasn't been able to break back above 89 besides to cap the price action. But this pair has stacked resistance here going into between 89 and 88, and you can see any move in this level, a break of this level, would definitely confirm a bigger move lower. But I'm going to say I'm hunching on the fact that we're going to reverse here, and there is also a butterfly trade that's setting up in this exact same area. Same with the Euro Swiss franc. And if we look at the 4-hour on this one, also you can see try to push lower, buyers came in. Now the Great Britain USD, this is also a very compelling story. It broke above this 166.70, 166 support zone, resistance zone. Now this area is acting as support. Looked like it was making a run today, and bam, right back. If we get a break of this 166 zone, I am all in for a continued push lower, looking to target the 162.50, 163 level. Have to watch that. Basically, we had stop runs across the board galore today, so we'll that's what I'm going to watch heading into the new week. So basically, it's almost all the same thing. We're looking for reversals in the Euro USD, US Swiss franc, Great Britain USD. Let's take a look at more of the more exotic pairs, and I still have the same synopsis I've had for quite some time in this cross. In the Aussie, as long as the pair, we can see we have the broader picture. It came down, moved up to the 50 fibs, back down. What's it doing now? Not a whole lot of nothing. I mean, this talk about pairs not doing anything. This is what, 89, 30, 90, 150 pip range for about the last 2 weeks. We need to break this range, and then we can complete this natural move, which I think is going all the way down to the 0.272 extension around 83.80. And the Central Bank of Australia has stressed that they'd like to see the currency around the 80 level, so this would just be a beginning step. So we'll have to see. Keep your eye on this. If we look at the fours, let's see if we had anything exciting happen here today. No, just a bunch of cluster. So, but the Aussie, I would favor a continued move lower, but at the same time, if we get a move higher in the if we get a reversal in the Euro and Great Britain, I guess, and move higher in the Swiss franc, there's a good chance that the Aussie is going to continue to push higher because they're basically working in conversely at the moment. Look at the New Zealand USD. This pair is a bore. It's basically going between 80.50, 84. 80.50, 84. Maybe the range get a little broader, but you can see that 84 and 85.40, nice resistance. Moved up to that, and for no reason, I think it was 88.80, 83.80, bam, spiked down. Well, not there was a reason. It was up to that resistance zone. So this pair right here, right now, is sitting about mid-range between 84 and 82. There's really nothing you can do with this. I'd like to see another push up to 82, 84 for a push back down lower, or you could go short right now and just have your stops above this daily right here at 83.40 and see if you get momentum to the bottom of the range towards the 82. But we could, you know, the trend line in play here, we could just see another step higher, then push back down lower. No clear thought on that pair at this moment. USD yen, you can see that the yen pair came down, tested 101, 106 levels, support level again, spiked up higher. This pair is just really comfortable between 103, 103.50 and 101, 101.60. Want to see a break of this, but I do favor a break to the top side, and then I want to see a full extension up to the 108 level, basically. If we can get a break of that 103.50 level, that's what I'm betting the house on. Well, could bet the house on, we'll see. Great Britain JPY, back, trend line, boom, touched it, reverse. This guy does this trend line has been very respected, and I have a feeling, well, not a feeling, my theory, what I'm looking at constructively is that we're going to get a reversal in this pair, something to jump into and get even a breakdown to this 169.23, and then even further down towards 167.50, 50 fib of this move higher. Great Britain odd, dancing on this 50 fib move. It has sat here for 7 days, just sitting and testing. We've had very little volatility in what I call my fire trades, which are the Great Britain JPY, Great Britain odd, which normally produce 3-4 trades a week. Had two trades combined in those so far this week. So it's just because there's some complacency in that zone. Let's take a look at those harmonics I was telling you guys about. It's pretty clear cut. We have in the Euro USD a butterfly in play. You can see that we had a 4-hour butterfly, boom, pushed up higher, and you can see I have a reversal zone between this 1.27 fib at 138.16 or the 137.80. I mean, I probably wouldn't enter like the second it enters this zone. Because it would be nice to see if it moves up to the 138.20 level, and then look and put your stop above that, even maybe get a spike higher. That's the problem with harmonics, obviously, is because the butterflies, the levels are just morphed into another trade. But if you want to stack into it, any move up to that 137.78 level would be key. If we look at the 15-minute chart at the, I don't have it on the chart anyways anymore, but you can still see the zone. Any move up into this area was a sell, and boom, down 25 pips right away. Swiss franc, there's a harmonic. Obviously, it's going to be the inverse. It is in the sell right now. In the buy zone, you can see it moved down to 1.27, 88.94. Boom, the 1.68. Would have to put your stop right below that 88.40 level. looking for a pushback all the way up to this 90-80 level. So the R&R on that trade is great. It's just something to keep in mind. All right, everybody, if you want to join today, and we have a look at the stacker trades. What I do, stacker trades, is how I trade on the daily charts in the Euro, Great Britain, and Swiss franc, and then the fire trades in the Great Britain, New Zealand. Then I keep my eye out for Harmonics, and you get access to the Keen feed where I go through all these trades every day. Just posting them out there for you to take a look, and you can also see how I'm trading, see what I'm doing, and follow if you like. All right, sorry about the audio. Left my speaker, my headsets at home. I will have that taken care of next week. Join today. You can be in for next week. Everybody have a good weekend. Go USA and Canada today, against Canada today.